good day, people. All right, so let's look at this. All right, so we got someone. So this was back in March 17th. We got a 40x Bitcoin short whale increased its position. All right, to 517 million with leverage. All right, so the liquidation price was going to be at 85,565. Now the problem with these type of orders is that sometimes you don't know what their strike price is, where they're trying to get out at. Let's go back to March 17th, which is right here on this Monday. And I'm just going to denote an arrow, green arrow. Let's do red since they were shorting. So right here. All right. The next day, it dropped to around 81,000 some change. So this person was in profit. You're doing a 40x. So let's do the percentage drop. And I don't know what time of day they did it. So it's gonna be a little off, but that is a 4% move. So let's look at our calendar right quick. I mean, all right. So they did a 40x leverage. So you basically 4.16% times 40. Hold on, did something wrong. Sorry. Let's do this. 40 times 4.16%. All right. So that's gonna put us. All right. Let me see. So hold on. All right. So yeah. So that's gonna put us at 166% gain on their money. And let's go back over here. Let's see exactly. I mean, 517 million. Let's see. Let's do the math on that. You know, let's see. Let's see. That's gonna put us at. It's gonna be $860 million and 20. Yeah, 100. Basically $160 million. Total value at 1.3 billion. You know. So we don't know what they did, but they was in profit. All right, it worked. Now here's the thing. Let's go back. See, they the liquidation price was at 85,565. All right. So if we go up here, we'll look, and I put a yellow line, 85. So right in this area, somewhere in here. Let's just say right here. All right. This is their liquidation. So they were in profit. All right, and then it came back. I'm sure with the position that bid, they're just not going to leave it open. They made money. All right. But I want you to look because we have something else. All right. This came out today that somebody is using a 40x leverage again. All right. Overall short position is 54 million. They shortened it at 94,709 with the liquidation at 115. So this person got a bigger margin for error, so to speak. But I want to show how price reacted, and then we pushed up. So since that was made, right, on March the 17th, all right, price ultimately from this low here moved 9%, almost 10%, which is really good for Bitcoin, right? So it essentially went from 81 all the way up here to 88 some change. Then it rolled over, spiked back up, and then we went lower. All right. So what am I trying to say now? All right. Could we? Because now you have this short. All right, you got a lot of people coming in the market that's probably going to short because they say, okay, a whale know what they're doing, right? So it's going to short, but we have to be careful. It's because this is what can happen, right? We can trap. It can, basically, we can move a little lower, but I wouldn't count. I wouldn't count this out that we actually push up higher before we eventually roll over. And we got some days. So, this is on the 17th. We had one, two, three, four, five, six, seven. We had 7 full days before that we went higher before we eventually start to roll over. All right. And even with this right here, we know that this was a liquidity grab. Spike up here, knock out all these short orders. All right. You collected all these stop losses eventually before we rolled over for good. All right. So what am I saying? I'm just basically saying just be mindful. A lot of times uh, you get these news coming out that somebody is shorting, somebody is buying, and it could be that you're generating liquidity for them. You probably have to go back and look and see all of the times these big whales are putting these big enormous positions on. Well, how does price react during that time frame? That'll give you a clue, some form of historical data that, hey, maybe we're being used as liquidity. So be mindful. Also, we know historically, Bitcoin conference, we see drastic drops off in price after that conference, which is another liquidity thing, right? A lot of people are hyped around the conference. The price typically goes strong into the conference, right? And we have a conference coming up this year, right? So we got here May 27th in Vegas through the 29th, right? So we want to make sure we keep an eye on that. And that's going to put us out here, 27th. All right, to the 29th. All right, so this is a lot of price action that can come out into this future over here. All right, now look at these fair value gaps. We got all these fair value gaps that's down here. We could come back down. We can move. We could push. We could inch. We could go a little higher, but we also can ultimately come back down into these areas, right? So we want to pay attention to that, right? So I would have to do an average of what the price has dropped. So I have to run an analysis over the years. But we have some in the past that dropped 20, 30, 40% or more. But let's just say we did have one to go to 30%. All right. We're talking about a 60 something $1,000 Bitcoin. All right. That's not far fetched. Okay. We're still within this structural range that could happen. All right. Especially if we take our Fibonacci retracement tool and we take it up here. All right. These are the levels. We have not yet even visited the 61%, which will put us at a 72,425 Bitcoin. More than likely, we'll probably pierce this one and we'll get out to the 70, 78 ish, which would put us around at 62, $61,000 Bitcoin. It's a possibility. All right. Now, when these are visited, typically after that, we're good. We're off to the races. We'll shoot back up to the upside. We're pretty good. All right. Like I said, I'll have to do a whole entire video just on the Bitcoin conference, so you can see that after the conference we have a typical pullback. Now, I just did the extreme based off 30%. Sometimes it's not that. Sometimes it's 15, 20. It all depends, right? We done had some catastrophic ones where we dropped 40, 50%. Now, watch this. Remember, we can push higher. So if we push higher, it's going to help with the percentage, right? So if we're dropping from here on down, you see it's a little different. So if we do 30% from here, we're still within range, 72,000 or more, instead of going down to this level. So keep that in mind. Now, guess what? All of what I just said, the market can do whatever it wants. It's a whole new regime. We don't know. All right, but just going off of historical data, so we're just prepared. So if this do happen, we got a solution. If it don't happen, we still have a solution. Run your race, run your plan. More importantly, continue to ask yourself, am I liquidity? Where is liquidity? Always ask them, where is liquidity? Someone has to provide it. It's the only way these markets work. It has to have liquidity. If it don't, the market does not work. So if we want these markets to be efficient, we need liquidity. You just better be on the right side. You want to be the one who's using liquidity for your advantage instead of you becoming that. All right. Hit the like button, subscribe to your boy E White. I'm out.